Netflix, for example, it's a media company, but it's really a data company. And so like my best companies are ones that on the surface look very different than they do underlying. Great companies are ones that are building a truly transformative layer underneath that gives them a competitive advantage.
What's up, everyone? Welcome to another episode of Demo Day, the podcast for entrepreneurs and venture capitalists, where we demystify the culture of joining one of the top accelerators, incubators, or VC funds from around the world. I'm your host, Sean Goldfaden from Coefficient Labs, and on today's episode, we'll be interviewing Petra Griffith from Wedbush Ventures. Without further ado, let's get into Demo Day. Petra, thank you for joining us on another episode of Demo Day.
I'm really excited to be here. Thanks for having me.
So, Petra, I always start the podcast off by asking around like the why. And, you in particular will be talking about your career. You've worked for some major brands, Netflix, Yahoo, iPrint, you are now a venture capitalist. And so you've had the opportunity to kind of span your career, and you really could be doing anything with your time right now, but you've chosen to invest in founders. You've chosen to support the entrepreneur ecosystem. And, what is it about founders and startups that, gets you up in the morning? Why do you love doing what you do?
Yeah, no, great question. And it's really, there's two themes. So one, like, I studied international politics in college. Like, I actually wanted to be a diplomat. I worked for a think tank for a summer, and I was like, oh my God, like, you're just sitting here pontificating, and I want to do something. And so on the encouragement of my dad, I went into business, and I worked for Fortune and Money magazine, and it was, digital media was just starting to blow up, and I was like, that's where I want to be. And so I moved to the Bay Area, and I did startups, and I kind of learned my way into product, meaning like I was hired as a marketing manager, I think my first startup, and then the product management didn't exist as a profession, and it was like, oh, like the business is doing one thing, the engineers are doing another. How do we bridge those two, and how do we come up with like the strategy of the product? And it was the first time where like the software was the product, right? Before that, I did product development and publishing, which was like, oh, we have the Money magazine, let's create a newsletter, for Ford, let's create different business, like almost like business offshoots. And this was like, this is the core product, and the product is not like editorially driven, or it's not like, I guess their product management existed in terms of like, what should this glass look like, and what's the next? And I did some of that later in my career as well. But like, that's where I love building 0 to 1, I guess, is my answer to that. And I found that I just love this, like, okay, you have an idea, and how do you bring this idea to life, and who do you talk to? How do you validate that this is the right idea to go to? And then how do you also validate what the right strategy is? And so that's what I just love. And I did that for 3 startups, and I went to Yahoo, big tech company. And even though I was part of a big company, I was always working on like, where's the world going, and how do we build towards that? And so like I started in search advertising, but then I went into like new ad formats, and mobile came about, and what does content look like in mobile, and how do you build ad formats that take, search is such a It's such a great product because like consumers love it because you are, it's useful. It's tuned to relevance. And so like it's a useful tool as a consumer to kind of quickly get to what you want. And it works for advertisers because they can kind of get, in a relevant way, get their message in front of the right users. Display advertising, in my opinion, never hit that mark.
I remember the old like skyscraper, skyscraper was
actually the email login ad at Yahoo was like the most outperforming ad format, but it was also like it was maybe not useful, but it was like unobtrusive, but it was pretty at least. So I got very passionate about like how do you create a monetization framework on mobile and with video that meets both the advertiser need as well as consumer demand. And that's kind of been a theme throughout my career, this like B2B2C, this like something that works. I started in consumer oriented tech products, and then later also in physical products. And but I also like this thinking through something that works. It also has to work on the business side and on the strategy side. And to me, that's what product is about. It's like, it's not just like, what the consumer wants, but it also has to make economic sense. It has to be able to scale. It has to be able to be distributed broadly. But I just have a passion for that 0 to 1. And the other thing I actually became passionate about is the LA tech ecosystem. And so, I started my career really, I spent 1 year in New York, but then went to the Bay Area. And I was there like in, 96, 97 to 2001 in the dot-com boom period. And it kind of like that was the formative years of my kind of career and as an early kind of post-college graduate. And you see like the Bay Area just works so well. You have this, I mean, like this meant nothing to me back then, but Ron Conway was an angel investor in iPrint.com, and SoftBank led our Series A. And it was just part of like my day to day. And then when I came to LA, I realized like, we don't have a whole lot of angel investors here. We don't have a whole lot of venture funds here. And so when I left Yahoo in 2012, or even like at Yahoo, I was there for 6 years, and by the 5th year, Yahoo was going through a lot of turmoil. I had like 5 bosses in a year, and I'm like, I can't do this anymore. Like I loved Yahoo as a brand, but it was no longer a place for me to really grow. And I wanted to stay in LA. I love LA. I've really kind of grown. I'm German originally. I never thought I'd like LA, but I've really come to grow LA as a place of diversity, of a place of different opportunities. Actually, just like people get stuff done. It's known for attitude, but it's interesting. Like until I worked for Netflix, I didn't have much exposure to the entertainment industry.
Yeah.
But actually, the more I do, it's a very creative way of thinking, open-minded, pushing the envelope. So, long story short, I really appreciate the LA ecosystem. And in 2012, I started to see. I was part of what had been Overture and was one of the first, I think, $3 billion exit to Yahoo back in 2005 or whenever, I don't remember the exact date. And then MySpace came around. And so you had these alumni from Overture, these alumni from MySpace to start to seed some new companies. But honestly, as a product manager coming from Yahoo, we had 1 billion people globally that we were programming against. And at Yahoo back then, we had demand media. It just wasn't, as a product manager, there weren't very many interesting roles. And all of my friends who swore they would never leave LA were moving to the Bay Area. And that for me was okay, what can I do? I want to stay in LA. I want to be in tech in LA. So how can I make an impact here? And it was a kind of realization that that ecosystem and environment plays a big role in this, and particularly around mentorship, angel investing, and capital, just in capital at later stages as well. And there were, it was Upfront had just rebranded from GRP to Upfront. Mucker was around, and Crosscut, and I think those were really the only venture funds back then. And so there weren't a lot of venture opportunities. And so I had an opportunity to join a bank to set up a venture banking division or a startup banking division. And so I kind of jumped at that opportunity because I thought it was an interesting platform to work with startups. I learned a ton about, it was interesting because I went from tech, the world is your oyster, how do you disrupt, how do you change the world? And you're in a bank and you're just the bank is all about minimizing risk and and how do we not lose money? And it was such a different, I'd never been in that kind of environment before. I'd worked for publishing, but I'd never worked in such a kind of risk controlled, regulated industry before. So I learned a ton, but for me, I had this thesis that it was a way for me to kind of help the ecosystem, at least kind of share what I had learned, be a mentor and advisor to startup founders, and then also provide capital. I've learned that debt capital is a very different kind of capital than equity. I do think it plays an interesting role in later stages. I don't think it has any business in the pre-seed, seed, even Series A. I think it's a hard, until you're in a growth stage, I think it's a really hard way to capitalize a company. But it was a great way for me to build a platform to help kind of connect with the ecosystem, build out the ecosystem. And it's just been tremendous at how that has grown in the last 15 years or so.
Yeah. What's so cool about your experience is that it spans across multiple industries, different locations. You've been in San Francisco, you've been in New York, you've been in LA, you've worked for some of, like, at the time, like, Yahoo was the company. Netflix has now become such a juggernaut. Time is like one of those companies that's just like part of the, it's just a brand that everyone recognizes. But you also have had the experiences of going to college in Europe, and maybe you can kind of bring us back into like early life for Petra. I know that you mentioned politics was kind of like something that you were really passionate and interested. Bring us up to speed on like, where did you grow up, and how would you describe like early life for you that got you into politics? And then of course we can talk about how that transitioned into tech. What was early life like for you?
Yeah, so I'm German. I was born in Germany to German parents. My parents, my dad was, my mom was a secretary to my dad's boss, so they sat in the same office. My town, I always joke, the town I was born in, it's in the it's Marl, Germany, Marl, and it's in the kind of the industrial region of Germany. And everybody in my town either worked for the chemical company or the coal mine.
Wow. Wow.
I mean, it was a town of 100,000 people, but it felt small. All of my relatives, everybody lived in that town or the town next to it. And so it was a very grounded, comfortable upbringing in that regard. But my mom, interestingly, was always interested in. She'd been an au pair in England. She stopped working when we were born, but she always had like this desire or this mentality to be global. And so my father had the opportunity to do projects in the U.S. with his company. He worked for the same company his entire career. And so like that was kind of, it was a very, and so he did a project in Texas. We lived in Fort Worth, Texas for a few years. We moved back to Germany, and then he got a project in Piscataway, New Jersey. So we moved to New Jersey. I mean, New Jersey and Texas are very different.
Yeah, definitely.
And it's interesting. It's like, and again, I was like, I was 11 when we moved to New Jersey, and I had remembered our time in Texas, and to me, like, that was the U.S., right? Like Fort Worth, Texas, that was the U.S., and we landed in New Jersey, and I was like, whoa, this is very different than I remember.
And when it came to like school and what you were interested in, you mentioned that you started by going into a think tank. I've always been curious, like, this might be the worst question, but like, what exactly, I guess, what is a think tank, and like what do you do in said think tank?
I think the fact that I was German, but then I actually I was lucky enough that I learned English early, so that when I moved back to the U.S., like I've been able to lose my accent, and so I think that perspective of being able to like be at home in two cultures has really shaped me. And I think my personality is also one that I'm always trying to find solutions for something, and that's what attracted me to diplomacy. I've always been from a very young age was interested in like world peace, and I mean, Cold War was something I spent a lot of time thinking about, and how do you resolve the Cold War, and what was the causes of Cold War. And as a German, you also, spend a lot of time learning about World War II and the Holocaust. And so that was something that I just intellectually always like deeply affected me.
Yeah.
A think tank, to answer your question, is there are institutions that ultimately do research to inform policy either at a governmental level or even at a company level. And so I spent a summer working for was the Institute for Foreign Policy Analysis, and I just thought this was great. Like I landed, this is exactly what I want to do.
Is it like a startup vibe where like because when I think of think tank, I'm like, 6 people sitting around a table,
right,
pontificating about the world. Like, is it something that feels very nimble and fast? Or I know sometimes, right?
So my experience is so slow. And so it's a little bit more of an academic institution in my personal opinion. And so it's a small team that appealed to me. And so I think I remember it was like 10 people maybe at IFPA back then. It was much more defense oriented than I think I had realized. And so some super smart people. It's like one of the guys I worked with was manned a nuclear submarine.
Wow.
Another guy was a ranger, and so like just super smart people, like super well, like they came out of defense, and they were just like knew, like had a lot of hands-on experience, but ultimately we did a lot of research. And so my job as an intern back then was like, and this is like 1990, I don't know, 5. And so like there wasn't a whole lot of stuff on the internet. So I'm like I read the news, like my job was to read the newspapers every morning. So I read the German and the Dutch newspapers, and I had to summarize the key stories with a lens towards politics, to lens to anything that was being discussed around.
And was the think tank in Germany, or was that in America?
No, it was in Boston and Cambridge.
In Cambridge.
In Cambridge, yeah. And so ultimately, like we did research, we kind of informed research around certain topics, and so then the partners of the firm would put together research reports around specific topics, and they would go and hold talks, and they would publish papers to their constituents. And so it's kind of a research firm in that regard. And it's like it's the output and the impact you can have is interesting, but the day-to-day is like just information gathering and putting information together. And that just, to me, I want to do something, I want to have an impact in that. And that it wasn't nothing against those. I think they play an interesting and critical role in informing policy, and I actually think we need to be putting more towards that, but it just wasn't for me.
Wasn't for you. And now, was there a moment in the internship that you were at the think tank where you started to think to yourself, like, I kind of want to learn more about business? Or, because moving from going to undergrad in Germany to then going to London Business School, I mean, London Business School is, a top tier. And I would imagine that, the classmates that you're like, everyone is at that point, like really focused on either joining a company and being an executive or building their own business. Although entrepreneurship probably wasn't like the most prevalent thing back in the early 2000s. And so what was the kind of thought process that you had, and what made you want to start learning more about how business works, and really like, kind of gave you the opportunity to start to look into some of these bigger companies in the tech side?
Yeah, no, it's a great question. So actually, I went to college in the U.S. I went to high school in New Jersey, and I went to college at Vermont Middlebury College and liberal arts college. I'm a big proponent of liberal arts colleges. I studied international politics and economics. And as a liberal arts school, you're not. It's not applied. It's much more like learning how to think critically. Obviously, you have sciences and that in some ways are applied. But like I was just very passionate about like international relations. It was right when the post wall falling, and so all these questions around like how do you build out like Poland and even South Korea at the time, like what does it take to take a country from a communist, socialist, less socialist, communist and totalitarian regime to a democracy, and what is it like that? Those are the topics that I got really passionate about. To be honest, like I mentioned earlier, like my father was in finance for a chemical company. I honestly had no idea really what that meant. I remember going into like in high school.
It's like, I don't know what my parents do.
I know. And so I was like, I have 3 kids, and I always tried to like explain to them what I do, and in terms, I hope in terms that they can understand, so that it doesn't become so foreign to them. And I'm super impressed with like middle school and high school kids who understand what business is.
Shark Tank. Amazing.
Yeah, I know. And entrepreneurship is something I've become really passionate about because it's nothing I grew up with. Like my father like worked for the same company's entire career. Like that was always what I thought about business. It's like these amorphous chemical products. Like I couldn't even describe, what my father did or what his company did. And it was really his encouragement to try business. And so I knew about banking. And so like banking and consulting were the 2 obvious career paths. I interviewed at banks, and I actually got an offer to work for a consulting company. And I just looked at it and I was like, I don't know. I when I talk to people who do it, like it's just like they're coders. They're just kind of like a cog in the wheel. Like I want to do something that is just more active. And so I had the opportunity. Time Incorporated had this program where you had a job, like you had a role, you had a job. So I was on the Fortune and Money magazine publishing side, and then the new product development side. But then we also got to meet other people in the company, and I just thought that would be a good training. And that's kind of what lit for me this product development was something I hadn't thought about before. And it's not policy, it's not diplomacy, but it's similar in that you're like, you have an idea, you validate the idea through consumer research, and then you build something. And there's just something that I find so invigorating about like launching. Like there's something, I mean, in launching, it's so funny as especially as a startup when you launch. Sometimes I remember launching my second company was Zulu Sports, and we launched the website and we'd spent months working on it, and like there was nobody there. Yeah. But there's still something really, I don't know. I get a lot of energy out of the building process, and the just like the process of putting something together. And there's lots of decisions that you have to make and trade-offs you have to make, and pushing through the vision and prioritization, and then putting that together and getting user feedback and then iterating on that. That's the process I really enjoy.
Now, the startup ecosystem, especially at the pre-seed level, like there's so many startups that don't make it. They go under for whatever reason. But in hindsight, being able to look backwards and having worked at, companies like Netflix and Yahoo and like these 24-hour fitness, like these institutions that were able to push through and were able to push through for decades to, become the brands they are today. What was it like being in the early days of some of these tech environments? Was it very similar to the vibe that you see, for your startups that you invest in today, or did it feel a lot different? What was it like to be at some of these earlier stage companies, comparatively to where we are, 10 years later, 15 years later?
Yeah, it's a good question, and something I think a lot about. And I think I look at Yahoo and Netflix as almost like two opposite sides of the spectrum. In that, like, so after banking, I went to Netflix, and I loved Netflix, and I want to talk about kind of what I learned at Netflix and something I take with me when I look at startup companies. But like I really I learned that I love the 0 to 1 stage, and I love the capital side, because I just get so much satisfaction out of finding people who have ideas to change the world, or just to solve a problem, and then giving them capital. And you see this like idea go from idea stage to product stage to company stage. And then it becomes this like larger entity in the world. And that's something I just love doing, which is why why I love focusing on pre-seed and seed stage. I made the decision to become an investor. But to answer your question, like Netflix has such a strong culture, and strong leadership, and Yahoo had a very strong culture, but I would say got lost in its leadership, in my personal opinion. And Netflix always goes down to first principle thinking, and so when and always ask, like, well, what's the best way to do this, and why are we doing this way, and let's question all of our assumptions, and let's also make some bold bets and be comfortable with that and clearly communicate that throughout the organization. And I think is that combination of first principle thinking, not being scared of taking a contrarian view, and then just pushing forward, that has made Netflix so successful.
Yeah, I feel like people, like we have teammates right now, in their late 20s, and it's like, you don't even know Netflix. You think you know Netflix, but like early Netflix, when we would get those envelopes with the DVDs in there and you just send it right. I mean, it was like such a remarkable new concept, because I remember being in Blockbuster, spending an hour walking through the aisles. And then, when Netflix came out, it was such a change in opportunity, and it was just like so cool to see this brand that no one had ever heard of, that was like on the come up. What was it about the way that the leaders would lead, or what sort of, I know you mentioned some of your takeaways around first principles, but when you like are mentoring newer entrepreneurs, what are some of the learnings that you took away from a company like Netflix that you think other founders can, be thinking more about? Like, what does it take to build a company that lasts 10 years, 15 years, 20 plus years? Was there anything that you found to be remarkable that you try to instill in the founders that you invest in?
Yeah, I think that there's two parts to that. Like, longevity to me is slightly different than kind of the what I think about, especially in the early stage. And if you think back to Netflix, with the DVD, like, it was a relatively simple execution, but it was so delightful. And so, like, I always counsel my founders to be really focused on how do you delight your customers? And more specifically, I always think about, like, really understand your customers, understand their pain points. Don't go up here and be like, this is the problem they're having. Like, understand like what's the root of that problem. And if you can solve for that in a like easy, simple, like think about the most like simple, straightforward solution. Like Yahoo, we got really complicated. I think there's Yahoo had a couple of different like we had just so many. We were like, are we a media company? Are we a technology company? And Netflix was like, we're both. Like we're both. You're like, we're going to execute towards that. And so like Netflix had a very strong um,
Conviction.
conviction and focus. Like it was about the user. It was always about like, how do we have the best consumer experience? And we don't care about competitors. I mean, it was about like, it was never like, oh, what are our competitors doing? Do we need to keep up with them? What feature did they have? It was always about what do our consumers want? Why do they want it? And how do we deliver that to them? And how do we always like stay true to delighting them?
Yeah, I mean, Yahoo is an interesting story because they had so many existential like competition. It's like, okay, AOL is trying to grab this and we need to be better in search and we're trying to have this mail product. Like there was like so many different pieces of it and to some that can feel like a lack of focus or distraction. What would you say are some of the like if you could have gone back in time and whether it's giving advice, of course, we're at different phases of our lives here, but like, what are some of the things that you would have recommended? If Yahoo was a startup in your portfolio, what are some things that you noticed from the outside that sometimes at the highest executive level, there's too many distractions and there's too many things you're trying to grab at, but, from your perspective, what could they have done better? And is there a learning or a takeaway for companies at the early stage that they could take from your experience of like, Yahoo being one of the biggest companies that kind of had a downfall and you sort of like watch that happen and all of your different managers leaving and this happening and like what were some of the takeaways from an environment that wasn't a Netflix that you could still instill in some of your current portfolio companies?
I think there are two parts to that. One is I don't remember who it was, but there was the Peanut Butter Manifesto and at Yahoo. I don't remember who published it, but we were spread too thin, and so like fundamentally, one thing I always counsel my founders on is stay focused. Don't try to solve too many problems. And that's like the hardest thing as a startup founder. Like you suddenly get this big customer, this big brand, wants to work with you and you're like, oh, that would be so great. But it's not the problem I'm solving. And honestly, like sometimes you just need to look at like, okay, am I solving the right problem? Maybe I need a shift, but don't do both. I find like the more you try to do too many things, it just spreads you too thin and you don't execute well against anything. And so it's like don't spread yourself too thin. Be like very laser focused on what your mission is, communicate it clearly, repeat it, make sure everyone in the organization understands like what is your vision, what is your mission, what are you trying to accomplish. You'd be surprised how often, even in like a 5 or 10 person company, and that's part of like the diligence that we will do is we'll talk to different people in the company and just say like, what are you doing? What problem are you solving and why? And it's like, it's stunning how like sometimes each person in an organization has a different perception of what the company is trying to do.
Now, I resonate a lot with that because when you're at an early stage, you're like on one side, like fighting to maintain culture and mission and make sure that everyone's rowing in the same direction. And on the other side, you're like, we have to pay the bills. We need to hit our payroll. We need to get VC funding and show growth. And sometimes it's easy as a founder, and I'll speak, for myself at Coefficient Labs. It's easy to say, oh my gosh, like there's this opportunity here. Oh wait, this company wants videos. Oh wait, this company wants a website. Oh wait, this company wants this and that. And, I think that oftentimes they're baked in signal. It's like, well, we're getting revenue from this and we're getting revenue from that. And so when you have founders in your portfolio that have multiple opportunities, like there's lots of things that are working, how do you coach them down from, allowing too many opportunities to come in and to get focused when internally there's that battle of like, but we're not growing fast enough in any one of these areas. And, maybe if there was that focus, you would get there even faster. But how do you coach your founders that have opportunities and it's not just one thing that is potentially working, but the story we tell ourselves is like, but we got to keep growing and we got to get revenue and we got to find the new thing what do you say to those sorts of founders to kind of walk them off the ledge and get
Yeah.
refocused?
It's hard. It's hard. And I always say like that's where the pre-product market fit phase is messy. And to me, it's about understanding signal, and to me, that pre-seed and seed stage, that pre-product market fit, is where you experiment and where you need to really listen to signal. And if you're not growing fast enough, then that's usually a signal that you're not on the right path. And what's really hard is to give up that whatever. Like, let's say you're going after video, you're not growing fast enough, and then you're like, oh, maybe we should try something else. But you don't want to give up your existing revenue stream. So those are the hard things. But I think the successful companies, when I think about it, are the ones that can quickly iterate and quickly test and learn, is there enough signal? And if not, let's move on to something else and see if we see that growth rate, we see that market pull. I think that's the thing, like, I've learned being now on the other side, is like market pull is real. And if you're not getting market pull, if you're not getting a strong sense that you are a must have for your customers, like, it's a hard conversation to have. But you need to, like, as a founder, look yourself in the mirror and be like, am I feeling like what I'm doing is resonating enough that people are like banging down my door? And if not, why? And that's like the why is always the question. And it's honestly, it's really hard when you're selling into enterprise companies, because those sales cycles, they take a long time. Like, you're selling into an organization that has multiple departments and stakeholders, and those sales
And
cycles.
different goal, CFO's goals different than their head of marketing, which is different than, their product developer. And so they all have kind of conflicting sometimes, things that they're looking for. So, definitely on the enterprise side, you have to be able to kind of cut through the weeds a little bit to really establish where you want to be.
Yeah.
Now, there was a moment for you through some of these earlier companies, Yahoo, Netflix, 24-hour fitness, like, you've been through these, but there was a moment where you started to shift into the venture side, right? I think it was Make Lemonade Ventures was like the first, VC fund, or I don't know how you would describe it, but tell us about like the transition and the journey from going from like, I'm focusing on product, I'm focused on growing companies, to I want to invest in companies and I want to be someone that's supporting these new founders.
Yeah, I loved Netflix. I loved my time there, but I missed the early stage. Even though I was working on original content and working on a very new landscape, which was exciting. So, non-English content being distributed worldwide at the same time, like, there were some really interesting, for me, intellectually interesting questions that to be solved there. So it was a really fun time. I also worked on kids content, but it was a big company. The thing about, like, big companies, you end up, like, as an example, like the title of a show or movie was like one of the subjects that became really interesting, or the frequency or the cadence of when you release content was something that we that we ran some experiments around. And those are like, it was fun, but I missed the energy of early stage. And so when I left, Make Lemonade Ventures was actually, there was no investing during that time. It was more working with different startups in different shapes, just for me to explore, like, what is my next step? Like, do I have an idea that I feel passionate enough about that I want to start a company? Do I want to join an early stage company? And so I did grateful that I had an opportunity to work on a new streaming service in Australia, helped launch Binge TV in Australia. I worked on Wallet Joy here in LA, and then also worked on Slingwave with an old friend of mine from Yahoo, which was a marketing analytics company, and was an interim COO there and helped build that company. So during that process, I learned that I don't want to be a consultant. I like working with multiple different companies, but I don't want to be a consultant. I missed the role of being a capital provider. And so after doing that for about a year, I was like, what I really want to do, or what I think would be the best match for my interest and kind of where I am in my career, is to be able to invest in these companies. Like, I feel like I've built enough pattern recognition through my career and through the venture debt phase at Grand Point Bank that I feel like I've gotten enough of a muscle memory understanding of like what it takes to be successful, and I'm like ready to put kind of my money where my mouth is. And so I was very lucky to be able to partner with Wedbush Capital. They put me in business. We launched the first fund in March 3rd of 2020,
Wow.
right before the world shut down.
And, what goes through your head in launching a first fund? I think that there's a lot of up and coming VCs right now that are thinking about launching their own fund, that are currently launching their first fund. So what are some of the pieces of launching a fund that today that you had no idea going into it? Maybe misconceptions that you can pave the way both as advice or as forewarning to people that are about to undertake the next step of launching a fund. What are some of the misconceptions that you had in launching a fund that you now know today?
Back then, generalist pre-seed seed stage fund was different with an operator background. That was differentiation enough. Fast forward 5 years, there's probably 100 pre-seed seed stage funds run by former operators. So that as a differentiation is not enough. So really think about like, what's your reason for being? What's your unique perspective? How do you uniquely find deal flow or make decisions in ways that others do not? That's kind of like business 101. I think for me, coming from a product operator to the investing side, three things that I didn't appreciate coming into it. One is you say no a lot. Like as a product builder, you want to say yes and you get excited. But I mean, we say no, like, I don't know, like we look at 100 opportunities, we might make one investment. And so that means you're saying no 99 times. And that is hard. That was a really hard kind of skill to learn. LP management, like you have investors. I think this is something that founders don't appreciate.
Totally.
It's like, yes, I'm making a decision, but I'm making a decision on behalf of 52 entities whose money I'm managing. Like that's like something I take very seriously. So that's been really hard. I think portfolio construction, honestly, is something I did not have an appreciation for, and that's really a finance skill. Like, how much ownership do you have in a company? How much do you follow on in a company? I think a lot of former product operators just say like it's about I got into this company. Well, great, you got into this company, you got $100K check into this company, but you're going to be diluted 90%. Like those are some of the like dilution, down rounds, like the impact on your exit, the fact that you can actually invest in a company and get kind of kicked out in future rounds. Like those are some of the elements that I don't think new managers necessarily think about or appreciate. And I think it's great. There's been a bunch of new kind of accelerators for new emerging managers where these things are taught, and how to think about cap table, how to think about portfolio construction, what are the pros and cons, how to think about reserve strategy. And I think the other thing that I didn't quite appreciate is that, yes, as an investor, you're doing like deal flow, you're making a decision. Like that's what most people think about as a VC, and that's intellectually super interesting. But you're also like, you're a networker. Like you're constantly connecting people, not only for your own portfolio companies and your founders, connecting them with potential partners, potential customers, but you're also connecting companies with other investors. I think that's the other part. Like if you want to become an investor, you also need to be comfortable networking. You need to be authentic to yourself. And, not everyone is like, some people are very, very good at networking. Other people are better at diligence, and there's a spectrum of it. But I think it's really hard to be an investor without being comfortable, just connecting people.
Well, I think, what's interesting is that, you talked about how one of the things that you learned is like how much you have to say no, and that, of 100 investments that you could potentially do, maybe you only do one or two. And I think, we've talked about this before on the show, but I think a lot of founders and entrepreneurs don't realize that you as a VC also get told no, because you have to partner with LPs and you have to find new LPs. And especially in today's environment, I feel like it's even harder to go and raise money from an LP because there's so much, I could go with this fund, I could go with that fund. And so when it comes to building relationships with LPs, are there any strategies that you found for yourself that enable you to find the right sort of partners to, be a part of the journey with you? And, I think just extrapolated, like, how do you find LPs, or what strategies have you used to find LPs that you've seen work for Wedbush Ventures?
Yeah, it's a good question. I mean, I think we all have our own kind of networks that we bring in. I'm lucky that Wedbush Capital is my anchor investor, and so that one, gave me credibility from the beginning. There are they've raised other funds, or they've backed other funds over the years, so they had some connections to LPs that was really helpful. But I mean, most of the fundraising, I did on my own, and it's building I mean, being authentic to yourself, kind of leaning into relationships you already have. Like my favorite LPs are like people I've worked with before, like former like people on the operating side who appreciate kind of my perspective that I bring to investing. Quite frankly, like for Fund One and Fund Two, most of our investors are either like high net worth individuals or family offices. The institutional class of investors we're just starting to approach now, and it's a whole different world. So I'm learning.
Yeah. What's that like? If you could describe, like, what is, knowing that you've had high net worth individuals, you've had people that have already worked with Wedbush in the past, like, what's it like in today's environment? For those VCs that are thinking of starting their first fund right now, like, what is the environment like today, and how have you had to adjust yourself as you've navigated through it?
Yeah, I think it totally depends. I think there are a lot of investors who have been allocating the venture asset class for a while. We're very comfortable with the venture asset class, and a lot of those are deploying very slowly. They're not kind of getting the money back. So to them, it's almost like they have a certain allocation into venture, and they haven't gotten the returns from their existing venture funds. They just don't have more money to put in. It's super competitive. I mean, even emerging manager funds, like they can add maybe a new manager, two new manager, even 5 new managers a year. Like that's out of a pool of like, I don't know, 1,000. So it's just hyper competitive. And so I always just think about like there's the other sector that you can go after. It's a little, it takes longer, or
More upstream, or
yeah, or just, I mean, there's a lot of people who are new to venture, honestly. And one of the things I'm excited about also as an investor is alternative assets as an asset class, like just making more and more people are interested in that. And so even when you look at high net worth individuals or family offices, like investing in VC, investing in private equity, anything that falls into the non-public market or bond market. There's a lot of people who are interested in that, and even though that's grown a lot, I think there's still a lot of opportunity to grow that more. The illiquidity is hard, honestly. Like if you take someone who's very used to public markets, and then you say, here, put some money into this, and we're going to call capital over a period of time, and we'll return capital over time, but really don't expect anything for 7 years.
yeah.
That is really hard. That's probably mentally the shift that's the most difficult for people who are new to venture to make.
Do you see that over the next 3 years, 5 years, 10 years? Like, do you see that shifting? Because with crypto, with stocks, like people are like, where's my money? Where's my money? And do you feel like the standard for the 7 to 10 years is going to, it's just part of the game, and it won't, it won't evolve in that way? Or do you see changes happening where, VC funds are going to have to structurally change how they, either get money back or pass money back to their LPs? Like what's your philosophy on, given where we're at today, like how do you think VC is going to change over the next 3 to 5 years?
I think it's a great question. You're starting to see different structures, and you're also starting to see more secondaries. And so what's been really interesting to see, I think two things. I think one, there's been a realization. I was just talking to a friend of mine who's on the kind of investment strategy side, and a lot of the small cap stock, like historically, there's been a lot of growth in small cap stocks in the public market, but because there have been so few IPOs, that is now all in the private market. And so I think there's been been a realization that if you want to kind of get a lot of that gain, you have to invest in private markets. And so you're seeing more secondaries. I mean, like you're just seeing a lot more of these, like a SpaceX or a OpenAI, and a lot of those shares are now becoming more easily available, not public. But I almost wonder if and then I guess I think we're going to see more secondaries. I think we're going to see more pressure to sell. I think, we've seen some of these like funds 12 years, even 15 years out. Like I remember Rick Smith was on one of these podcasts and talking about he's still managing company invested in 2008.
Yeah.
Like I think there's going to be, I mean, on the one hand, some of these, foundations, endowments is long-term investing. And so I think there's always going to be a portion that's comfortable investing in the long term. But I do think we're going to see either companies go public easier or the secondary market where you can get liquidity at a certain point.
Now, talk to us a little bit about the philosophy of Wedbush Ventures. Do you guys invest in direct to consumer and e-commerce? Do you invest in SaaS companies? Are there specific industries you love? Maybe talk to us about like the makeup of the perfect type of investment for you, or at least one that gets you guys really excited.
Yeah. I think this is, and this is kind of where my background comes in. So there's two things we think a lot about. One is we spend probably more time thinking about market than most other pre-seed and seed investors. So yes, it's absolutely about the founder, but the market plays a big component in it. And so I think a lot about where is the world going? What are markets that are just ripe for disruption, where technology can really reshape markets? Because that's where, like, again, like when you talk about signal and market pull, it's like when you've been in a Netflix and in a Yahoo during its growth phase, or even a startup, like when you hit that, it's you can. It's just magical, and it's almost never because the product, only because the product is great, because it has to be the product is great in an environment that just really needs that right now. And so I think a lot about what are the market trends, and so we're spending a lot of time in fintech. We're spending some time also in commerce enablement, so not direct to consumer brands, but just kind of just in general as we navigate this like online versus offline, this AI reshaping how consumers make discoveries and do their research. Like I think that reshapes just kind of the commerce experience, especially like ad tech, martech part of commerce. Workflow productivity, like future of work. And this is not like HR. It's more about like we work more flexibly. How does AI reshape how we do things in our jobs? And I know everyone's talking about AI will like kill jobs. I mean, sure, maybe it probably will kill certain kinds of jobs, but it'll also create new kinds of jobs. And
for sure.
Like I think about social media manager. Like a social media manager didn't exist when I started, 25 plus years ago. And so, but I think I'm actually really bullish about AI and how AI can help you just from a first principle perspective, rethink how you solve, some of these are like legacy industry problems, banking, or even consumer facing problems. Just kind of like with data, you can use data in a different way. That gets me really excited. And then healthcare data, like just how do you make healthcare decisions differently with data and AI, like for me, it's more AI unlocks ways for you to be able to leverage data to deliver better services.
Yeah, well, you've been through so many of your work experiences have been that transitionary shift where like one technology is killing another technology, but is then, Netflix, killed more traditional, Blockbuster, and Blockbuster killed more traditional going to the movies, and, 24-hour fitness killed like, the local. And so like there's always going to be that kind of the new tech that's going to remove certain jobs. But then, Netflix now is like, they do streaming, they do live sports, they do. And so like it's going to continue to evolve. Now, when you meet a new startup for like the first time, bring us through kind of like, what goes through your head from a decision framework. Are you using tools to help? Are you using instinct? Are you focused mostly on Excel? And, I know at the pre-seed stage, like sometimes the numbers aren't there to necessarily support. So like what goes on in your mind as far as like, okay, I'm meeting a company for the first time. These are the things that are going through my head.
Yeah, and so I talked about market. So we think a lot about like market dynamics, and the other thing I always think about is the founder, and the two things I'm always kind of looking for when I have that initial conversation is, you know, what is the has the founder gone deep? Like, do they really understand the problem that they're solving? Can they articulate the problem that they're solving? Like, I don't know if you've ever had this, but like, when you kind of you can talk about something but you don't fully understand it, so you use these generic terms, and that's something I've just seen over and over again. Like, if someone doesn't fully understand something, they can talk about it and use big words.
AI doesn't help with that too.
No, AI doesn't help with that. But like the founders who can be very tangible and specific in what problem they're solving, why it matters, and what unique insight they have. Like, that's the other thing that I've seen is like the best founders are ones that have like just spent a lot of time thinking about a problem, talked to a lot of people, and there's usually like a comment a customer made that really kind of gives them a unique insight that allows them to solve a problem differently than others. And so I'm always listening for like how deeply do they understand the problem? How well can they articulate the problem? How well can they articulate the solution around the problem? And then do I have conviction that they can execute? So it's kind of like the how thoughtful are they and how quickly can they execute? And that's a hard combination to find.
In the founders that you've invested in, I oftentimes will ask the question of like, you have good founders, they may not be like fund returners, but they're solid founders. They've got a great team. They're in the right sort of market. And then you have the standouts, you have like those founders that are, breaking down walls in order to bring their vision to life. Like in your mind, like what separates a good founder from a great founder?
One thing that really helps in the early stages is execution velocity, ability, like we talked about earlier, like ability to quickly learn, pivot the company, focus the company. That really kind of helps accelerate in the short term. I think the other thing, Netflix, for example, is a data company. It's a media company, but it's really a data company. And so like my best companies are ones that like on the surface look very different than they do underlying. And so that to me, the great companies are ones that are like building a like truly transformative layer underneath that gives them a competitive advantage. And so ultimately, like Netflix, for example, like the personalization is what makes Netflix. And the reason they are able to do personalization because they invested a ton in data infrastructure, data, machine learning, but also just in teams of people that are tagging. At least when I was there, it's probably done by a machine now of data. And so it's always thinking about like how do you solve a customer experience, but also how do you build like a defensible tech layer underneath it? But tech to me is always about like in service of solving the consumer problem and not the other way around. Like I get very turned off when someone tells me like, oh, I have IP and oh, I have this great tech. I'm like, well, that's great. What are you going to do with it? Right? Like it's much more about like what problem are you solving, and show me that someone cares about that, and then really invest in the tech and the tech differentiation in addition to culture. But it like honestly, like that's probably the companies that really excel are the ones that get that infrastructure right that you don't see on the outside that makes the solution that much better.
Now, for the teams that are the right fit for Wedbush, like where are they typically at? Are they at $0 in revenue with a big idea and an MVP? Is it just like, here's a piece of paper with my idea? Are they showing revenue and signal? Like what constitutes a good fit for those first conversations with Wedbush?
Yeah, we'll do both. We've done pre-revenue idea stage. We'll do anything before Series A. Once you hit Series A, in my opinion, you've hit product market fit and you're in growth. And that's just not like same as a product manager. As soon as my products hit growth stage, like I was out and we're kind of working on the next thing. And so for Wedbush Ventures, we do pre-seed and seed stage. The pre-seed, I will say, like if you're coming with an idea, I need to have confidence. Like, one, it needs to be a market I deeply understand, so I've seen around those corners. I know what you're going to run into. I have enough conviction that your idea will work, or I have enough, like, an understanding of the market. And I also need to get comfortable that you can execute. So those it's very, very hard for me to back a first time founder.
That's pre-revenue.
That's pre-revenue. I'm trying to think if we've done that. Or I just need to have some conviction that you can execute, that you have also the ability to take information and pivot as need be. And it needs to be an idea I'm super excited about. And it's the other interesting thing is like, yeah, sometimes it's just intangible. It's like, did I wake up the next morning? Am I still thinking about this? This is a problem that I'm really excited about. Like the other thing, like when you're on the other side, like you'd be surprised how often you see the exact same thing. And it's like, oh, here's another AI tool for venture funds to run their diligence. Like, I mean, literally, like we've talked to 6 in the last 2 weeks.
Wow.
And so I think as a founder, you don't always see that.
You're like, I'm doing it.
Yeah,
like no one
know.
else is doing this.
Exactly. And everyone is like, well, we're approaching it this way and we're approaching it this way. And I'm just kind of like, oh, like I get much more excited when someone comes to me with an idea like, oh, I hadn't thought of that. Like, or this is a really interesting kind of unobvious problem that people haven't thought about necessarily.
What is the typical check size for founders that are curious about, like, if I was to go work with Wedbush? I think that a lot of founders don't realize how important it is to know what a typical check size is. And, sometimes there's this like, oh, we'll take money from anyone, but in order to put yourself in the best position of fundraise, you really want to like slide yourself into like the right sort of framework for the VC fund. Mm-hmm. What's a typical check size look like? And, for founders that are thinking about potentially getting an investment from Wedbush, like how do they know if they're the right fit for you?
In our current fund, we like to come in with at least 200K, but you can go up to 400K with our entry check. We love, pre-seed, seed stage founders that are raising, 1 to 3 million is our sweet spot in today's world. It seems like seed rounds are now like 3 to 5 million.
$8 million seed round.
I know. We like the more $1 to $3 million. I've also, like, having been on the other side, like I've been in startups that have raised too much capital, and honestly, there's nothing worse than maybe nothing worse, but it's actually, people think, oh, I have all this capital, I have all this cushion, but you make bad decisions, you overhire, you don't stay as focused. So I actually find that in that pre-product market fit stage, like stay lean, like don't have, like to the point earlier, like you need to make sure everybody's on the same page. You need to make sure everyone's working well together. So I like smaller rounds personally. Less than $1 million, I also have a hard time with. Like, you need to have enough capital. But yeah, if you're a founder building in fintech, commerce enablement, healthcare, and kind of future of work, workflow, productivity, and you're in that pre-seed seed stage, and you're just like really focused on solving a problem and understanding the user and coming up with a novel solution in a growing industry. Like, yeah, I'd love to talk to you. And given our check size, we collaborate a lot with other investors. We have led pre-seed rounds with our check size, but generally speaking, we kind of work to bring capital together. And it's less, I hate the you're a follow-on investor. Like, to me, like, we run a process, like we get our own conviction. We don't rely on someone else's decision making. And so if you're obviously, like, if we trust the other people in the round, we can kind of use some of their diligence work. So I hate that term follow-on investor.
Yeah, because it's like we're in the boat together.
Yeah, exactly. And I always think about, like, okay, this is a founder that I'm going to hopefully work with 10 years. Like, is this the kind of person that I want to work with? Do I feel like I can give them feedback and ask them questions and they will listen? So that's the other thing I think about.
Now, when you get an earlier stage founder that's coming in to get, their pre-seed check, oftentimes part of that money is used towards like getting the right sort of team around them, making a couple of key hires. And so, knowing what you do now about your experience on the product side at Netflix, at Yahoo, like when you meet that early stage founder and you've just given them a check and they're coming to you for advice on like, okay, I'm thinking about hiring this person or that person, what sort of advice do you have for founders in building their early team?
I mean, first of all, we probably won't invest unless we think you have enough of a core team already together. That is so crucial, in my opinion, to have the initial and complementary skill sets. And I think a lot about also like how long have you worked with these people? Like it's a stressful time, and if you've only I know there are co-founder matching programs and they will work, but I get much more excited if it's like, oh, I worked with this person in a previous job together. I have a working relationship with this person. That's one comment. I always like bringing in hungrier people. I like bringing in people like it's just an execution mindset in that early stage. Not to be critical of people who have a background like me, but I think it's really hard for someone who's been in a big company to go to a startup, and we always get excited. Oh, this Google person, this Meta person, this Apple person joined this company. It very rarely works out at the pre-seed stage when you bring on,
because the structure of the bigger companies is so misaligned from like it's like you're used to is that the reason that it's like such a different environment, mostly around like management and structure and resources.
And what the other thing I've seen, and I think Netflix is different in that regard. As a product manager at Netflix, like we were a very lean organization, so we had this very strategic role, but we also wrote the requirements, and so we didn't have any like junior people, and that's like one of the criticisms of a Netflix product manager is that we don't have a lot of experience managing product teams. But most other organizations, like when you rise up, you're not doing the work anymore. You're doing the political management, and then when you get run a startup, like you don't have anyone to offload work on, and so that's probably the biggest thing. Like they're super smart, they can be very great advisors and open doors, but I've just seen it's very hard for someone later in their career to come in and then also like write the marketing copy and do the financials, and it's just a lot of grunt work. I mean, there's always exceptions to the rule, but in general, like I always encourage founders to think about like find someone hungry, like find someone who you can skill up. Like it also, like I've seen some people really rise to the occasion, and personally also in my career, like people who were very young but were put in positions of responsibility and really rose to the occasion, and I find those are better matches in a startup environment than someone who comes from a big company background into
Totally. What are you most excited about right now? Could be personal, could be business, could be both, but what has you really excited right now? Maybe we'll do both. From a personal perspective and a business perspective, what has you most excited to wrap up 2025 and into next year?
Oh, that's a good question. I mean, I just came off of a 10-day backpacking, backcountry road trip, so I'm still kind of in that afterglow.
Wow. Where'd you go?
We went to Oregon, Idaho, Montana, Wyoming, Utah. And we like Yellowstone, Grand Teton, and the Sun Valley area. So yeah, it was awesome. It was like my cell phone didn't work for 10 days. It was genius. So I'm an outdoors person. I'm looking forward to surfing season. I know you can surf year round here, but like summer is my surfing season. So like that's what I'm looking forward to. I love the summers here, and that balance of you can actually get a lot of work done in the summers here. I find like it gives me time to think. It's just not slower pace, but it's just it tends to be fewer meetings and more thinking time. So I actually really enjoy working over the summer. On the professional side, I mean, it's so cliche, but like honestly, like AI has been this. I was a skeptic when not a skeptic, but ChatGPT came out, and I was a little bit like, okay, yeah, great. Like it's on the one hand very revolutionary, on the other hand, I'm like, okay, so fine, like my kids can now use ChatGPT to write their papers. Like, how is this a good thing? But I have really been struck by how quickly models have gotten better, how much it has changed my workflow, and it really feels to me like like the internet revolution 2.0. And so that's, on the one hand, I'm cautious because I do think we're going to go through a similar bubble moment as we did in the dot-com boom. bus cycle, and still navigating like where are we in that cycle. The progress has been much faster. So like mobile, for example, like I worked with mobile advertising at Yahoo and mobile product in general, and we were like, oh, this is where everybody's going, and it took a long time to get mobile adoption from consumers, but especially from advertisers. And the pace of change and the pace of adoption AI is just staggering to me. So like it's cliche, but I think that's the thing that I think a lot about, and think a lot about like what we're right now in the obvious use cases. And so like what are the unobvious use cases that we don't see yet? Like same like mobile and social media, and how that created a whole new economy, and from a marketing and content creator perspective, an attention perspective. And so like I haven't like, yeah, I don't know quite where this will go, but
Yeah.
that's what has me just excited to be in the middle of it.
Well, as someone like you've mentioned that you like love looking for that pull, that moment in time, it feels like we're kind of going, everyone's pulling into this world, and it's now like, what are the micro ecosystems that will start to be created across these different industries? Petra, this was an awesome episode. I'm so happy to have you here in the studio. Where can people find you, or what's the best way for founders to either get in touch with you, to learn more about Wedbush? How should people, best communicate or find you?
Yeah. No, thanks for having me. This is awesome. Really, really great question. Super thought-provoking. I appreciate it. And my first one in person. I've done these over Zoom.
You
so
crushed
excited
it. You
to be
crushed
in person. Yeah, we're in the process of updating our website, wedbushventures.com. We have a submission on our website. So honestly, the best thing, we look at all of those. So if you, actually, I would say two things. If you don't have this is also so cliche, but like, if you know someone who knows me, honestly, that's like the best way to get in front of us. I look at all cold emails that come in. I also look at all the submissions. So I'd say if you, the submissions on our website is a great way. If you want us to look at your business, we look at all of those. You can reach out to me on LinkedIn. But I would say like the website is probably better, because I get inundated on LinkedIn.
Amazing. Petra, thank you again for joining us today. And from everyone watching at home, I'm your host, Sean Goldfaden from Coefficient Labs, and this is Demo Day. Peace, guys.